Hello friends, and welcome to my YouTube channel Simply Talks. And today I'm going to talk about Amber Enterprises, which still can be becoming big from these levels or slightly down from these levels if you can buy at lower levels. And over the next 3-4 years, it can still become big because of the kind of market cap that it possesses now. So let's understand about the business and let's understand why I believe that this can be pretty big over the next few years. Let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Amber Enterprises, a small request to kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you can get 1 year you can get 1 year access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you want detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you can get access to exclusive articles and videos. Plus, if you cannot pay on Patreon, you can join the YouTube membership as well. Now, what the company established in 1990, Amber manufactures a number of consumer products, have contract manufacturing from a number of brands, and this includes the AC companies, compressors for AC companies, refrigerators, and automotives. Now, market cap of the company is under 12,500 crores. Have nearly all AC firms under its ambit, and it is present across India at the moment. If you look at the financial, then these are FY22 numbers. Sales went up by 24%, profit went up by 17%. The debt is low for the company. The debtor days is around 105. Return on equity of 10%, operating profit margin of 6% is not that great. But remember, one of its competitors, Dixon, which makes a lot of other products, they have a margin of around 2 to 3%. So, considering that 6% margin is pretty decent in this industry, in a very competitive industry. If you look at the performance, then the stock has performed well since its listings, and numbers have been decent continuously quarter on quarter. Stock has declined from the highs recently and gone to 3,100 levels, and those are very attractive levels to buy into. Numbers are coming back as things are improving on the ground. The PLI scheme is going to help the company boost its numbers going forward because there is a lot of revenue incentives and tax incentive that the company gets. And remember that contract manufacturing companies are in fashion ever since China has been under the cosh from global partners. So India are getting a lot of contracts because of that. So we have seen companies like Dixon, Reddington doing extremely well, and now Amber has also done well in terms of order book. So consistent growth is expected going forward, and the performance have been pretty decent over the last 2-3 years. So why I believe it is a buy on declines and why this can be big going forward. It is a low market cap for such a business with such kind of business of making ACs and compressors all across the board for virtually all AC companies, plus making compressors for refrigerators. This is quite a large business that Amber is taking up, and the fact that their margins are between 5 to 6% is pretty strong, considering many contract manufacturing companies are having margins less than that. So going forward, once things open up and things really get going, I think the numbers on the top line will look totally different. And considering a margin of 6%, we'll see very good profitability on the bottom line as well. It boasts of major AC and automotive brands, and that's why this is perhaps at 12,000 crores. Not quite the market cap that should have. It should be around 25-30,000 crore market cap company. It is a big consumption play, so a company that deals directly into the AC business is a pure consumption play. And remember that AC penetration here in India is extremely low. So going forward, I think things will only improve. There's heavy institutional and promoter holding with only 9% free float, which also augurs well for the shareholders. So what needs to be done, in my opinion, buy on major declines, buy around 3100, 3200 if you get a chance. So any level between 10 to 15% lower from current levels would be good level to buy. And if you have a 3 4 year time frame, you can start accumulating now as well, because the numbers will keep on improving going forward, considering the last two barren years that we have seen in the you can say in the summer season. And it can become a multi-bagger even from here if you have a 4 5 year time frame. I won't be surprised if this becomes a 30 to 40,000 crore market cap company, and have less than 10% exposure into such stocks. So this is my video on Amber Enterprises. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.